I just shared a really powerful strategy with a client who has millions of dollars in real estate. So I want to take several minutes and talk about the importance of maintaining cash flow at all times. Cash flow can come from sources like your income, selling assets, or various financing activities like taking out a loan. Having access to cash creates flexibility, and flexibility enables you to handle unforeseen circumstances, and it affords you the ability to take advantage of investment opportunities when they present themselves, especially opportunities that come up when others need to sell their assets in a hurry to generate cash, like fire sales. Now, I have a great example to explain the importance of cash flow for you right now. In 2006, before what has historically been called the Great Recession of 2008, when the financial system collapsed, both Ford and GM had lots of assets, okay cash flow, but they needed to make some improvements to increase their profitability. GM's management reviewed its financial statements in 2006 and decided to maintain the status quo. They believed that as long as everything went as planned, they'd be okay. On the other hand, Ford's leadership did something that was completely against what most people would think is rational. They took out loans against every asset the company owned to create a gigantic pile of cash of $20.6 billion. Ford mortgaged their buildings, patents, and even that iconic Ford logo to generate all the cash. How do you feel about taking loans against your assets to generate cash? Would you do it? After all, the status quo way of thinking says debt is bad and you should avoid it. But I'm going to show you what the CEO of Ford did was a genius move. And I'm also going to show you a way that you can learn how to duplicate it. First, let me ask, when will banks lend you money? The answer you probably think is when you don't need it, right? But really, they lend it to you when they have it and they believe that you're in a position to pay it back. If you're desperate, lenders avoid you. They won't give you a loan. In 2006, interest rates were low and money was easy to get. So the CEO of Ford, a guy named Mullally, took advantage of the opportunity to extract all that equity from the company's assets. Secondly, Mullally saw the company was generating okay cash flow, but they were losing money, so they needed to rearrange how they did business to get back on track. Now that required an investment and some risk. Where he was smart was he didn't assume the economic environment would stay the same as it was in 2006. Do you remember 2006? Everyone and anybody was getting loans. People were getting loans worth 100% of property's values without even having to show any proof of income and get that money. So Ford took advantage of this economic environment, not to try to buy assets, but instead to be prepared for a time when there could be an economic downturn, when cash wouldn't be as easy to get. This is completely opposite of what GM managers did. Mullally understood if the economy slowed down, both sales and cash flow would decrease, and that type of stress could bankrupt the business if they didn't have access to cash to make up the difference. So to prepare, extracted the equity from all the company's assets when he had the option to do so. And then thirdly, by turning that equity into cash, it put Ford in control of its future. All right, now fast forward to the Great Recession. As you probably know, GM ran out of cash. It was taken over by the United States government. There was no way for them, when the Great Recession was happening, to take loans because nobody had money to lend. The shark lender at the time was the federal government, and they took ownership of the company. As a matter of fact, for a while people were calling GM Government Motors instead of General Motors to play on those initials. Remember that? Making it worse, every shareholder of GM lost the entirety of their investment. The company was effectively bankrupt and the government took over to save the auto industry. I even had one friend in Orlando whose father willed her over $1 million in GM shares when he died. She lost it all. On the other hand, Ford was flush with cash. Even though sales slowed and operating cash dried up, they had all that cash they had generated a few years earlier, giving them the resources needed to pay their bills and continue making improvements and take advantage of opportunities when they presented themselves. They didn't wait till the last minute, so they never asked the government for a dime. As a result, their stock increased in the years since the recession, while all the shareholders of GM at that time lost everything. Now, for his leadership, Mullally was named Person of the Year by the Financial Times Boldest in Business Award in 2011. The CEO of General Motors, he was fired. So you might be wondering, how does this relate to you? Well, like it or not, you are the CEO of You Inc. Do you have assets like your home or your business? Can they be turned into cash easily, or do you need to ask permission from a bank to get that money? Do you have a line of credit? If you do have a line of credit, do you know if the bank can take that line away from you for any reason? See, a line of credit isn't the same as having cash in hand. Knowing this, do you have the cash to handle 1 year, 2 years, or even 3 years of expenses if something out of your control happens in your life? Or would an event like that ruin you financially? Cash is king for a reason. So here's my opinion, which I've formed from experience and observation. A lot of people are asset rich and cash poor. They have been taught that the key to success is to make every dollar go to work for them to make more money. And for goodness sake, they're taught to pay down debt and stop paying interest. Is that what you have been led to believe? I'm here to tell you that is exactly the type of thinking that puts people in a position where others who think like Mullally and Ford can come in and take everything from you when things don't go as planned. Yes, assets are important, cutting expenses is important too, but the key to success is having assets and cash in hand so you're making money while maintaining flexibility and control. The last thing you want to find yourself is in a position where you can't respond and have to beg or have a fire sale on your assets, because when this happens, you leave yourself open to suffering the fate of General Motors and losing what you worked so hard to create. How many people do you know have had something like this happen to them? You see, financial success isn't common because the common way of thinking isn't designed to help people succeed. Well, I mean, it helps you succeed if everything goes as planned, but you're smart enough to know that isn't always going to be the case. There are always going to be things that are messed up. Therefore, you want to be positioned so that if you experience financial stress, you can emerge from the experience stronger than you were before that stress started. Like I like to say, don't be the glass that shatters when it's put under stress and slammed against the ground. Be the bodybuilder who comes out stronger when they put themselves under stress. To know the right way to do this, you need to understand the rules of the financial game and understand how to use those rules to your advantage. This is done through a system like the kind I do in my wealth manifestation process. My hope for you is that you're always in a position to succeed, no matter what happens in your life or in the general economy. Sometimes you need a unique perspective that challenges the common way of thinking. After all, if the common sense way of thinking is so good, why is it so hard, and why do so few people find financial success? So anyway, that's the story. And so I hope this video served you. Be sure to subscribe to my social media channels, and remember, the decisions you make today will manifest the life you desire. And oh, by the way, if you'd like to learn more about the wealth manifestation process, you can go to this website and learn all about it and how it can help you reach your financial objectives. All right, this is Kevin Winke, and I will see you next time.